Hello, Laurie Lane-Zucker, founder and CEO of Impact Entrepreneur, and we're back at SOCAP in San Francisco, California. And our next interview is with Gerhard Pries from Sarona and Sarona Capital. Yes? Sorry, Sarona Asset Management. And you're based where, Gerhard?
I'm based just outside of Toronto, and we have offices also in New York and Amsterdam.
And now, Sarona is for those who are been involved in the impact space for a while, Sarona is a very well-known brand, very well-known name. You are, I believe, a B Corporation, aren't you?
That is correct, yeah. We've been B Corp for, 6-8 years.
Right. So one of the earliest funds, I believe, who got certified B Corp or B Corp certification. Has that been meaningful to you? In which ways has it been meaningful?
Well, we've been eager to sign on to any number of different initiatives that support or point in a direction of building healthier economies, and so B Corp is one of those. The IFC Impact Principles, UNPRI, United Nations Principles for Responsible Investment. All of those are initiatives, association groupings that aim in a certain direction, helping to build healthier societies, healthier economies for societies around the world. And so signing up to B Corp helps us focus on the specifics of how we operate, which I think is great. It's a community of companies, investment managers, and otherwise that seeks to create a better world based on business and investment. So we're very much supportive of that.
Now, I see as kind of the facilitator of the Impact Entrepreneur Network, quite a few emerging new impact investing funds that start up. Now, you're not a new impact investing fund manager. You're on your second fund now, right?
Well, we're on our third fund.
Third fund.
Yeah, third fund since 2010, and we will be launching another 2 funds next year. We actually point our history back to 1953. We inherited a history of a private investment company that started in 1953 doing impact investments in Latin America and then Africa and Asia, and then I was instrumental in restarting that in the 1990s, and then we spun it out and started Sarona in 2010.
And one of the many interesting things about Sarona is your success in getting different forms of capital into the funds. I know, or I believe, that you've had investment from OPIC in the past, Overseas Private Investment Corporation. Is that correct?
That is indeed correct. Our investors include high net worth families, family offices, some institutional investors like pension funds, but yes, also OPIC. OPIC is one of the development finance institutions that it takes a fairly broad view and supports international intermediaries like us. We invest only in emerging markets, so we're focused on private equity and private debt in Latin America, Africa, and Asia. And there are a number of development finance institutions, usually owned by national governments like CDC in UK, FMO in Netherlands, OPIC in the United States. And OPIC is probably one of the more open-minded development finance institutions, and we've had a great relationship with them as they try to support the flow of private capital into emerging markets, private capital that goes into emerging markets with positive impact intent.
Yeah, given their long history of doing that, it really says something that Sarona has, been able to get through their due diligence process and have them involved. So I know that they've invested in one of your earlier funds. Are you hoping to get funding from them for the current and future funds?
That is correct. In our previous fund, they provided us a $50 million financing facility, and they've doubled up to provide a $100 million facility for the fund that our current fund right now.
So they doubled it.
They doubled it, yeah. So we're absolutely thrilled with that, yeah.
Well, they must have liked the results of the last one. So tell me briefly about the sectors that you're focusing on.
So our investment thesis, from a pure investment perspective, is to invest in the rising middle class in frontier and emerging markets. The truth is, despite what a lot of development agencies might advertise, the truth is that the world, the population, the poor people are not as poor today as they were 10 years ago, 20 years ago. There are billions of people, literally billions of people, moving from $1 a day to $2 a day to $10 a day, etc. As they do that, the structure of the economies changes, and many developing countries, many emerging market economies are working hard to shift from a resource extraction economy to more of a manufacturing, a service, a consumer economy. And as that happens, there's a great need for investment in small and mid-sized businesses. There's a dearth of capital available to economies in emerging markets for the growth of those businesses. So our work is to support these growing businesses. Generally, we're talking about EBITDA positive companies. This is not loss-making companies. We're talking about EBITDA positive companies serving the rising middle class in those markets. We're not so much interested in the mining extraction in Brazil, which is then shipped to China, turned into consumer products for America. What we're interested in is what's the Brazilian population doing? What are they consuming? Healthcare, education, food, so agro-processing, food distribution, etc. A variety of consumer goods, consumer services, goods and services that this rising middle class is looking for.
Given the markets that you're working in, and given the fact that you are funding growth stage companies, can you kind of give us a sense of where those companies' earlier stage funding might have come from?
Just like here, early stage funding, venture capital is really hard to get. It's more difficult even in, say, Nigeria or Indonesia than it is here in America. So most businesses here and most businesses there start with family money. You know, people are knocking on the doors of their parents, of their aunts and uncles, of their cousins, etc. That's how almost all businesses start. And so it's a tough game at the beginning of any business's life. And so, but when they come to some growth, and indeed in emerging markets, microfinance supplies some of that debt at those early stages of growth. When they get to be larger, then they're looking for equity, for equity investment. And so the truth is, the average equity check that we write or that our local investment partners write is between $20 and $25 million per company. So these are not tiny companies anymore. They're growth stage, small to mid-market companies. Over here, they'd be called small because they're not that large. Over there, they're often in the mid-market space.
Great. Hey, well, listen, give me your website address for people who want more information.
Sure. Our website is saronafund.com. Sarona being S-A-R-O-N-A, saronafund.com.
Great. Thank you, Gerhard, for taking the time out.
Thank
Appreciate
you.
it.
Pleasure,